Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what I think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will not be, you will be kept up to date with everything that we do here, and you will not miss another video update. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check that out too? Let's jump right down into today's video, kicking things off with the 1 hour time frame. Here we have a Bitcoin paired up with USDT, and the data source is Binance. As we can kind of see, we're still stuck in this little channel. We're kind of talking about this the other day. We had that break to the upside on Sunday, pretty typical. Now I look at this as a breakdown structure. We have the overlapping patterns within candlesticks. So I'm not overly confident right now on the price action here on the 1 hour time frame, but we are getting closer to a breakout situation, which would be at the $37,980. So that we go ahead and actually snap the correct one on there. You can see it right there, $37,980. Okay, if we breach that high, then we do break out of this structure that is slightly bearish. Okay, so that's going to be a big positive. The higher this has gone, though, the limited damage that will be done when we have a retracement. I still look at this as a 5-wave move that we're looking for to come on out. So we are looking for this move to come down here. But at the moment, it's just looking like a double bottom is all that is required towards the $35,500 level. Okay, that would make a big sideways trading motion and ultimately get us ready for this next big move to the upside for our big 5th wave movement. Now, on the EMAs, we are back above them all. We have got momentum on the 1 hour time frame, but I think we're losing momentum on the 4 hour, and on the 8 hour. So they're not looking anywhere near as confident. I think that we have to be looking and thinking about this progression downwards rather than thinking that we are likely to get that breakout. But if we get the breakout, it's good. We know what targets we're looking for. 37,980 for the breakout. Doesn't necessarily mean you're going to continue moving straight up. It does mean that you break out of the pattern, and we could have a quick retracement and then another rally. But for now, my expectations are that we sit within the structure. We haven't broken out, and therefore we are likely to see that break down towards 35,500. The EMAs and the SMAs are going to be interesting to see if we can find support on there, but I'm not confident on the 4 hour or 8 hour time frames. Ultimately, though, I think we will eventually get that breakout. We are, of course, targeting out the $38,750 to $40,000 range. That hasn't changed. We still sit within that structure, and that is looking pretty good. Smart money concepts is, of course, in a new, fresh, bullish characterization of, bullish characterization. We just come out of that bearish one. And again, you can see how this happened. We saw this high, we moved down, we saw the change of character into bearish, then we saw the move up to a new local high, higher than what we saw over here. And that changed the characterization back into bullish. And then we started to see this immediate move back to the downside once we did that. Ultimately, this is a big ranging market. It's sideways trading, and it is liquidating people on the short side and on the long side. It's a tough market to trade when it's going sideways. It's not one that you want to kind of get too involved in my opinion. That being said, I do see some opportunities when we actually hit this higher range target because there's going to be some pretty decent short opportunities there, in my opinion. Now, ultimately, we are still in this channel. We are looking for that breakdown. We're looking for 35,500 on the hourly. Let's move this up into the daily. This is all a part of a 5th wave movement of a 5th wave movement. And so what we're really tracking here is a 5-wave structure inside of our 5th wave movement. And that is essentially going to be something that we are looking for that bigger break, right? We haven't yet seen this, in my opinion, moving out. We saw a wave 4 move down here, okay, and it was an irregular flat in order to kind of get there. And then I think we are looking for that new 5-wave move. I don't think we've finished the wave 4 just yet. I still think we're in there. It's a complicated structure before we actually finally get that 5th wave movement. We are looking at this as an expanding diagonal, which basically means, I don't know if I've got that, no I haven't, essentially it means that you end up with a short wave 1, a decent wave 2, a much bigger wave 3, and wave 4 that can come down but cannot cross the wave 2 low, and then the biggest wave is wave 5. Essentially, the rules are quite simple. Wave 3 cannot be the shortest wave. Wave 4 cannot cross the origin of wave 2, and it expands out, so it looks like this, right? So that's kind of what we're tracking here within this. It also goes the other way, where you have a large wave 1, smaller wave 3, wave 4, and then a wave 5 that is usually typically the shortest wave, something to this effect. And what you tend to find, if I draw this in so that I can demonstrate it, is that this contracts in and it looks more like this. So I'm going to just adjust those waves to give you the idea. Okay, expanding, contracting. And then, of course, you get your regular diagonals and all the other kind of patterns. But ultimately, this is an expanding one, and that's kind of what we're looking at. We're looking for a really large wave 5 to hit that $40,000 or $38,750 to $40,000. And that's going to kind of complete that pattern. We are, of course, in smart money concepts, bullish structures still that hasn't been broken. We are above the 200 EMA, above the 50 EMA, and above the 50 SMA. All of that's stacking up quite good. Obviously, when we do eventually start to see this breakdown, I'm looking for that support level at $31,000 to $30,000 level. That's going to be an interesting zone for us. It's also a fair value gap right here as well, so we'll keep a close eye on that. Ultimately, how we react to this price action is going to, or this particular level of support is going to be key to us. We're going to bounce from here, in my opinion. It's whether or not we're going to find upper areas of resistance and lose that, and head on down more towards kind of that $24,000 to $25,000 level. And if you lose those, well, you know where my thoughts are on that. Which leads us actually into our weekly time frame, because the weekly time frame gives us our ascending wedge, which is bearish. We are hitting the upper area of resistance. We're heavily overbought, and I've gone through this a few times at this point, but you can see on the stochastic RSI is down at the bottom here. Last time that we had an overbought area, we retraced 20%, so we could be looking for just a 20% reduction around here, which would basically bring us back down to that $30,000 level. Alternatively, if you take a look at the time beforehand, we had a much deeper retracement from overbought to oversold, which was 27%, and if we go to the time before that, it was much deeper, where we saw a retracement of 63%. Ultimately, when we're up in the overbought area, we look for retracements. Now, it can't time the market. It's essentially just telling us that we're running out of momentum, as in there's lack of interest now. And that's also visible from our volume profiles as well. As you can kind of see, the volume profiles are non-existent as we've pushed up higher here. It's been pretty consistent like this for quite some time. And so we do know that this ascending wedge is a bearish pattern. We do know that we're hitting upper areas of resistance. We're up in the overbought areas. Probability tells us that we are likely to see big retracements in the market. I suspect 40% reduction rather than a 60% or a 20%, and that actually brings us right back down, aligned to the $20,000 CME gap on the daily. So it'll be interesting to kind of see how all this does play out. Obviously, it's just wild speculation, but the pattern here is, from a candlestick point of view, very bearish. You have these overlapping structures. It's never a good sign. We have high highs, higher lows. That's again not a good sign. And we have the ascending wedge, which is a bearish pattern. Ultimately, we haven't seen the big breaks that we really wanted to see here. It looks great from the smaller time frames, but when you zoom out, it's not that good. So we are looking for moves to the downside. We have obviously speculated as to the rationale and the reasoning behind it, whether that is going to be Bitcoin spot ETFs being rejected. Check out last night's video if you haven't done so already, because there are some developments with the Bitcoin spot ETFs that could indicate rejections, and that's going to be interesting. All the way through to Fed pivots and obviously everything that's going on in the world. There's lots of reasons why the market should move down. Doesn't necessarily mean it's going to, but it should move down on the premise of all these fundamental things that are happening in the real world right now. It'll be interesting to kind of see how it all plays out. Ultimately, candlesticks are bearish, patterns are bearish, Elliott wave theory is bearish, stochastic RSIs are bearish. Ultimately, I'm bearish. So I'm going to leave it there for now. On the weekly time frame, it's not looking as good as it is on the smaller time frame. So let me know what your thoughts are in the comments below, but I think that's going to wrap up today's video. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.